Before the video, I want to tell you about the Baker Street Property Meet, Monday 25th of July. We are joined by a very special headline speaker, Kwasi Afum, VP of Barclays. He's a strategy guy and he's going to be talking about how we can profit from recessions. Now, every recession that's ever taken place sees one thing happen, and that is a transfer of wealth. A transfer of wealth from people who are not in the know to people who are in the know. So you need to be in the know. You need to hear from Kwasi Afum, VP Barclays Strategy. You're going to also hear insights from myself and Andrew Roberts. There's going to be a feisty panel debate hosted by the one and only Cyril Thomas. That's all on Monday, 25th of July. Now, normally our networking events take place on Wednesdays, but we've moved it to Monday because of a national rail strike on Wednesday. There's no strike on Monday, and we've got a lot cooler weather forecasted for next week. Of course, our venue is air conditioned and all of that, so it'll be comfy and you'll learn a lot, and you'll have the chance to network and meet up with 300 plus passionate property investors. Book your place now, bakerstreetpropertymeet.com. See you guys on Monday. So building costs are rising rapidly. What does that mean? And who is most adversely affected by this? Because some are able to better shoulder these rising costs than others. With me to discuss this subject, I'm joined as usual by Andrew Roberts. Hi there.
Hi Ranjan, welcome again. It's great to be discussing one of my favourite topics, buildings and
costs.
Prices.
Yes. Now, I mean, we hear these headline inflation rates, 9% and all of that. But let's face it, the inflation in building material costs seems to be a lot more than that.
I would say that, yes, some things are going up at a greater rate of knots than others. For argument's sake, this month's current trend is rock wool insulation. It has been timber. It has been plaster. So it fluctuates. But overall, if we looked at it like a UK shopping basket inflation, it's the average is increasing by around 9.9%. And that's because some prices have risen and then they've plateaued. Other prices are now catching up. But I think we have to look at why some of those are rising.
Of course. I know rock wool about rock wool. But, I think a lot depends on, it's not just inflation. I think the elephant in the room here is also what goods are imported. A lot of stuff is imported. And what I mean by the elephant in the room is that prices are going up, but we've had Brexit. Yeah. And since Brexit, the UK currency has tanked. The pound against other currencies has tanked. So a lot of the price, right, if you're importing, say, second fix bathrooms and stuff, and tiles are coming from Portugal, bathroom suites are coming from Italy or whatever, then the value of the pound is less against those currencies. Totally. So that is having an effect, plus the inflationary effect is having this double whammy on imported goods.
It absolutely is. And also what we have to look at is freight is another cost of this. I mean, your Chinaware, you might buy it from Falcon Bathrooms. It's made in Ras Al Khaimah. You buy in dollars. The pound against the dollar is significantly down. But then you've got the freight shipping it from the UAE to the UK. And freight costs are up. Oil costs are up because of Ukraine, Russia situation. And oil's done in dollars, so again that's a double whammy on us.
Yes, yeah, and the fuel cost to get it somewhere. I mean, someone was saying, it's not quite the transportation costs. I heard something, a business owner who runs a coach company talking about £2,500 worth of diesel in the coach just to do a trip from London to Birmingham or something. It's just ridiculous. So if you've got a lorry load of plasterboard, there's a huge amount of diesel that you're putting in there.
You've just got to change your vehicle, Ranjan.
Put plasterboards in the convertible or something. Yeah. But this is, some people are able to weather this better than others. I mean, expecting the larger house builders and developers are able to have greater buying power. They're able to store materials a little bit longer. And spread costs across multiple projects.
Well, I think that with the larger developers, it is down to how they're funded. So Ranjan, major builders, they tend to be funded as PLCs by shareholders. So they have a better line of finance available to them. Unlike you or I, who we tend to buy on a project by project basis, they have the ability to forecast, because they've land banked a large portion of sites, what their demand for materials will be. So they will pre-order materials and have them drawn down off schedules. Therefore, they are consuming materials and locking in prices better than you or I can.
And they're obviously maybe buying direct from the manufacturer,
Correct.
securing better prices, able to store stuff. But we're talking about developers, but we also need to look at builders.
Yeah.
So a building contractor will have tendered for a project, sometimes on a fixed price basis,
Yeah.
without really any provision for dramatic price rises. And those people can be stuffed and folding. And we're already starting to see part finished developments coming onto the market.
Well, we do see those coming onto the market, and that creates a number of problems. I mean, if we looked at it from the builder's point of view and the developer's point of view, if your builder goes bust, you're often left with a half-finished site. I've actually seen sites where the contractors have turned up to site and took back. The electricians have just gone and cut the tails on all the electrics so that the whole thing's got to be redone because they're cheesed off, they haven't been paid. You have sites where the workmanship was basically cobbled together because it was to try and get a stage payment off the developer. But also you have the likes of the builders merchants who, a good little tip here is to keep in touch with the builders merchants where your trades are buying from, and they will give you a little bit of an insight into how they're paying their bills. And you also feel the stress of your builder if he's hustling you for a quick payment because I need the materials on site and they're just waiting for a payment.
Well, the other issue is when that's outside of your control. Mm-hmm. Because if you're using development finance, and then basically it's released in arrears, based on a QS appointed by the financier doing a valuation. And it takes a little bit of time, for them to come around, do the valuation, write the report, give it to the bank to then release the funds. Then it comes into your account and you pay the builder, or it goes directly to the builder, depending on how they've done it. But that's still a little bit of extra time.
Yeah. And that's all working capital that you need to build in. But going back to the sites going bust, the things that you've also got to be careful of is they might look like bargains if they're coming through auctions or distress sales from banks. But the problem is you have to almost undo some of the work that they've done. You have trouble with building warranties. You have trouble potentially with EPCs where things haven't been done to the standard. And with the change in Part L building regs about the evidencing of works and the photography that needs to be in place, you've got a potential problem.
Absolutely, because you can't expect someone that's gone to the wall to be that forthcoming with handover information, which is essentially exceptionally important in this climate.
It's critical with all of the new changes that have been going on. And what I'd advise anybody that's thinking of doing any of this is, number one, don't try and do new build development out the ground at this point in time. We're going into a potential deep, dark recession, probably one of the worst that we have seen in our lifetimes, going back at least 50 years.
Yeah.
I know you don't look that old, but trust me, he is.
But I think it's not just that. I think it's we've got this, the thing with doing 5 new build houses out of the ground is that, first of all, it's going to take you ages to get the planning permission. Then, of course, there's the build-out time. You've got to dig the foundations, pull the foundations, walls, roofs, windows, all of that. And the problem with that is by the time you get to the stage where you're actually putting in finishings, such as the bathrooms, kitchens, and all of that, it can be 18 months down the road. Yeah. And by which, at this stage, can you really estimate what those finishing items, which are all imported, can you really estimate what they're going to be?
Well, you absolutely can't. But I think the big elephant in the room is it's 18 months down the road. What is the housing market going to be like 18 months down the road? Are you going to have buyers?
And who's going to be the housing minister? Definitely not the one we've got now. That's another story.
Whereas I think if people were to be a bit smart and savvy and to look at the commercial conversion route, you've already got the superstructure, the four walls, the roof, the floors. All you're doing is an internal reconfiguration. 3 months flash to bang, you're back out and you've got your property in the marketplace.
And that's very essential because the permitted development, commercial conversions, it's 56 days to get the permitted development approved by the council. And because of the fabric of the building already exists and it's just internal conversions, of course, it's quicker. So
and more price certainty as well on your materials.
Well, price certainty because of the time. Because if you're delivering a project in less than 9 months from start to finish, you can be more accurate in estimating what prices are going to be 6 months out than you can be 18 months out. I hope you're liking this video. Make sure you subscribe and hit the bell icon. We put out new videos each and every week. Tell us what you think or what experiences you've had with rising building material costs and of course labour costs. We haven't really discussed that in this video since Brexit. Of course, a lot of people have decided, well, quite frankly, again we talk about the pound coming down. A lot of people have come from abroad to work, other parts of the EU, sending money home because the pound was worth a lot of money.
Yeah.
Now they're getting same rates of pay, better rates of pay, staying where they are. So why come here and live 5 to a room or whatever while they're doing a building project, when they can have the lifestyle in their own country?
You're absolutely right. And also with the pound depreciating against their currency, they're getting paid less in real terms by being here. But I think that also comes down to the availability of skilled labour. And I'm hearing mixed messages. Some people saying, I can't hire crews. And on the other side, people able to hire crews and able to hire them cost effectively. And I think that is just knowing how to put together a project and how to hire crews.
Well, there is a little bit of that, and that's always the case. But across the board, labour rates have gone up. Because the number of people available to do all these roles have just gone down a little bit. So if you want to find out more about permitted development, which allows you to bring new housing supply to the market quickly within existing buildings which are already built, which basically means you'll be doing so for lower building costs, then check out our commercial property training and the permitted development conversions aspects of it. We'll leave the link in the description here, succeedingproperty.com/workshop. And also come and see us at the Baker Street Property Meet. Andrew and I host the UK's largest property networking event in the UK. 300 plus property investors on the last Wednesday of each month.
And it's a fantastic place to meet fellow like-minded investors and to undertake what we deem as your professional CPD, continuing professional development. We share the latest cutting-edge knowledge live in the room to those who are there.
So join us last Wednesday of every month in central London. See you guys in the next video.
You live in the USA.
I do live in the
You're over
USA.
here on business.
Yes, I am.
And you've made a special trip to come here to the Baker Street Property Meet.
The quality of people here is better than quite a lot of the other meets.
Come all the way from California, and it's one of the reasons why I'm here, to meet like-minded people, other investors, build my network, and continue learning and growing in the property industry.
I found it's quite informative, and I can meet a lot of amazing people, so I keep coming.
Great knowledge in a great environment with like-minded individuals.